Creative financing. What is it? How can it benefit you? And what are some of the options available right now in today's market? This is our next topic, which starts right now.
You ready? Let's go.
Hey, what's going on? This is Frank with Venture Home Group. Today we have a very particular topic I want to share with you, the viewer, because the topic has not been really shared out very consistently throughout our market and to potential buyers like yourself or someone you may know. Right now, our market has shifted significantly in the last 90 days, right? It's been broadcast in the news, with the media. I'm not going to beat a dead horse, but that's just the way it is, right? Back at the beginning of this year, buyers are getting beat up trying to buy a home, competing with multiple cash offers, competing with people gone above asking. Well, those days are over, as well as we all know, and it's very well documented. But one thing that's not been mentioned is, like, what are some of the creative ways a buyer can get into a home right now? See, traditionally, a buyer would have to go to a bank, unless they have like a bag full of cash laying around, which, let's face it, myself and a lot of people don't. And if you do, well, sharing is caring. Just joking. But traditionally, the buyer would have to go out and get some kind of financing, either from a private lender or typically, most likely, going to be from a bank or some kind of loan originator. And what would happen is the buyer would have to qualify based upon a lot of different variables, what their debt to income ratio is, what kind of loan they're going to get, either conventional, VA, FHA, or another one of their programs or other loan types. And they will have to qualify based upon income, if they're self-employed or they're W-2, how long they've been in their job, how much money do they make, what their credit score is, a lot of different variables, right? So let's face it, our interest rates right now have gone through the roof. This morning I checked, prime right now is going for about 5.7. Mortgage-backed securities have been the very minimal state, which is kind of ironic because earlier this week rates went up to like almost 6.3. Right? Mortgage-backed security was going crazy. The 10-year bond was skyrocketing. So a lot of factors affected mortgage rates this week. Now, stock market is looking a little healthier today, and there seems some light that rates are going to get better, but that could all change next week, right? We got the Federal Reserve talking to us here in a couple of days, and that could all change, right? But rates, let's just call it what it is. Rates about 6%, and the prices of homes have skyrocketed. I mean, that's just the bottom line. Prices of home have surged. Now prices are starting to come down. Days on market has picked up, and buyers are getting more and more options than they weren't getting at the earlier part of this year. So, but still, a buyer still has to qualify for that loan. Now, let's take, for instance, a buyer that is self-employed or just started a business. It can make a good amount of money, but they haven't been at that particular rate for over 2 years. Let's say they were W-2 employee, or they were a different type of industry before. They either become a contractor or they became self-employed and started a business. And now they can show a lot of income, and they have a lot of income saved, but because of the taxations, and they haven't had 2 years of taxes, now it limits their options to buy a home. Or take, for instance, somebody who has not the greatest credit. What are some of the options there? Well, one, you could pay to get your credit down. You can save some money to get your credit down, but that could take some time. And it's what we noticed with some buyers that had some credit issues years prior. That does take some time. And then what tends to happen is the price of a home goes up, and so does interest rate, and now they're kind of in a situation where either one, they can't afford to buy a home, or two, it's going to take them some time. So what if there was another way, right? What if there was another way that can help you eliminate those options, right? Well, unless you have a bag of cash or you won the lottery, there is another option. And that's called a seller carry, which it's a creative type of financing that don't have to go to a bank to qualify for a loan. The seller can be the bank, right? You guys can negotiate the terms on the loan and the terms and the length of the loan, and you can buy a property. Pretty much that simple. Obviously, there's more to it, all right? You got to make sure you have an advocate in your corner that can actually read the contract, that can actually advise you to make sure that you're not walking into something that's going to jeopardize you later on. You have to consider balloon payments. You got to consider a lot of variables. But if you're one of those individuals I talked about earlier that may have to wait a year or 2 years, and you don't want to hope, I mean, that's another thing too, I'm talking about in later videos, is that the market's stabilizing in Arizona. It really is, right? So we went on this downhill slope, and now we're stabilizing. We're seeing signs in some parts of the valley. We're actually seeing signs of interest again, which we have not seen for like 8 to 9 weeks. So let's say you're a buyer that has to wait for those 2 years of taxes, or has to wait an extra year for some payments to come off, or you were in a situation you had to get a job to know to qualify. There's a lot of different variables, but you have an option where you can go to the seller and say, look, instead of me qualifying for a loan, I can give you the down payment to you. We'll make this legit as possible, obviously with contracts and you have equitable title, but you can put a down payment. The seller now becomes the bank. You open up an escrow account with a third-party escrow company where you'll make your payments to, right? They will then pay the seller directly and pay off any fees. So in essence, the same principle, but you're not having a servicing company. Your servicing company or your bank is really the seller. You're paying the seller directly. You still have equitable title to the property, which means that within those terms, you can potentially sell that property as long as within your contract, and you have now terms. Let's say you do a 5-year term at a fixed rate for, let's say 6%, which is what the going rate is right now anyways. Then you can say 5 years, you can get your affairs in order so they can qualify for a loan, maybe refinance that property, right? Because now you have equitable title on that property. And you can refinance that property into your name, and the loan qualification is a little differently than it would be if you had to reapply again for the whole loan, because now you are an invested owner on that property and you have equity in that property. Or let's say, for instance, that you want to sell it in 2 years, you can sell that property as long as you pay out that debt, that initial debt, which you borrowed from the seller. Right? So let's say, for instance, you borrow $500,000, you put $100,000 down or $50,000 down, whatever was negotiated, and the prices do appreciate. You can potentially sell that property minus whatever you put down and whatever equity you have. And in most cases, those payments you make are amortized. So you're actually paying down the balance just like you would any other loan. Now, I want to show you some properties here in the valley that are actually very similar that have these options. Like I said, earlier part of this year, there was only a handful, maybe a dozen or so homes that were available. As of today, there was over 216 properties. This has a lot to do with days on market picking up, the demand, and just sellers wanting to sell because they're no longer getting the California or the cash buyers or overpaying for homes. They are starting to accumulate, so sellers are looking for other options that weren't available before. So let's go take a look at some of these properties and show you what is out there. Just as promised, we want to share with you some awesome homes that are currently available in the market right now with some carrier options. This one here, we're going to start off with this property located in Mesa, Arizona. It's going for $460,000. It's a 3-2, about 2 square feet shy of 1,700, built in 2000. And what's interesting about this property is that there's already some terms already enacted on this property, or the seller already came up with basically a 5-year, 6% interest rate and 10% down with a balloon payment after the 5 years. What that means is, we talked about, your payments go towards your equity. Is you're building equity as your rent. Instead of renting a property, you can take your mortgage payment and build some equity out of it. So a really, really cool option. The next home we have is actually in Phoenix, Arizona. This one's going for $515,000. This is a 4-bedroom, 2-bath, 2,253 square feet. Now look at that backyard. It actually was utilized as an Airbnb, so it was an income producing property with a sparkling pool. Very open concept, really well redone, remodel with nice backsplash, granite countertops, white sugar cabinets, open floor plan, and look at that little inside putting green facing the backyard with those Arcadia doors, which are really cool. The next home we have is in Chandler, Arizona, going for $573,000. This one is a 4-2 with a plus bedroom, right? Could be used as an office or as a spare room as well. And it's 1,956 square feet. Cool thing about this home, again, fully remodeled, nice little island, stainless steel appliances, white sugar cabinets, vaulted ceilings, tile plank floors, recessed lighting, and cool feature is no HOA, and it has a really huge RV gate so you can park your toys. Nice backyard, very, very low maintenance, and it has like a built-in Arizona room / bonus room, which we talked about. Could be used as a workroom, as an office, as a play area. A lot of different options for this property. Really, really cool. The next home we have is in Surprise. This one's going for $424,000. This is a 3-2, 1,640 square feet. It was built in 1999. But check out the backyard. Very low maintenance, artificial grass. Really, really cool home. And again, this home also does have a seller carry option, which again, we talked about, the seller becomes the bank. So now you don't have to keep renting. Your payments are going towards your home's value, building equity, paying down that loan through the seller. And there you have it. So we shared with you some really cool options that are available in our market right now that were not available several months ago. A lot of different reasons behind it. Earlier part of this year, we had less than 12. Now we're over 200 single family residents in Pinal and Maricopa County that are offering a seller carry option for you, the potential buyer who is either on the fence or they don't have the longevity at work, or they're just self-employed, or just couldn't get the financing for the traditional lenders. So this is your option. This is your time. If you want some more information, you can always follow us. Our contact information, you can find it at venturehomegroup.com. You can also find us on Facebook and Instagram at Venture Home Group, or you can give us a call directly at 480-409-9900. Like always, we're here to help. We're here to provide you info. Just hit us up, and until next time.